I will say, because crypto is a 24/7, 365 global industry, that you go to sleep one day and Bitcoin's 74, and then you wake up the next day at 62. This is not for the faint of heart, and you should not be investing with something that you need tomorrow.
Hey, everybody. Welcome back to another episode of the Richard Geek Podcast. Today, we have Dr. Tonya Evans. She's a law professor at Penn State, Go Big Ten, and the author of the upcoming book, Digital Money Demystified. She's a keynote speaker. She's sought after for her expertise in intellectual property. We're going to talk about some of the new technologies, crypto. She's testified before the House Financial Services Committee. I hope that worked somehow. And the Copyright Office, USPTO, to advise on intellectual property law issues. We'll get into that because I'm sure that Washington's kind of scratching their heads and say, okay, how can I regulate? How can I tax? How can I control? Anyway, Dr. Tonya Evans, welcome to the podcast.
Thank you so much. And I must say that I love even just the title of this pod. So you had me at Richard Geek because somehow I feel like I'm in both of those lanes. So I get that for sure.
We're all, well, most of us are geeks, and I love hanging out more with geeks than I do the other type of people because they're the most interesting characters.
Understood.
So before we dive in, give us a little bit of background about yourself and how you went from where you were to all of a sudden the digital assets and all of that.
Yeah, nobody's more surprised than I am in some sense. You know, as a lawyer, I practiced in big law. And then with my mother, who's a patent attorney, for about 10 years until I pivoted into academia. And, you know, I'm trained to spot issues, solve problems, mitigate risks. And so everything about my training and my focus seemed to be the antithesis of doing anything that was outside of my risk comfort zone when I think about my own personal investing. And I went to Northwestern. I was a scholarship athlete, so I played tennis. Fun fact, having nothing to do with what we're talking about today, but I played tennis professionally for 4 years before I went to law school. Traded that in after, I think, losing first round as the first seed in a small tournament in Puerto Vallarta. I met my best friend there. We drank a lot of tequila, and I said, I think I better get myself back to law school. My parents agreed, and the rest is history. Went to Howard Law School, checked all the boxes of all the things that one should do to have a very conservative practice. And at first, actually, I was in the Trust and Estates Department of two major firms to do sophisticated planning for high net worth individuals. I wasn't a high net worth individual at the time. I was a high income earner. But what I've learned over the years is I do not intend to spend the rest of my life trading my time for money. And even though father's a doctor, mother's a lawyer, my father's parents, neither one of them graduated from high school. So this is relatively new. And you think about the conversations that you have around the kitchen table that form our relationship with money and wealth and what that means. You know, I had a lot of unlearning to do just at the time that I started learning about crypto in 2017. And when I heard about this, and I'm an intellectual property lawyer now by training, and most of my courses are at the intersection of copyright or trademark and new technologies. So I was, you know, my entry point really was at the intersection of my existing expertise, IP, and this new version, evidently, of the internet that was coming in to be fully distributed and decentralized. The first use case of this time-stamped decentralized method of managing and securing data was for financial transactions. And then hearing about this magic internet money, didn't quite understand what that was in 2017. And it was also at the time when there were some issues, not unlike 2022, we had kind of the Sam Bankman-Frieds. There were enough issues going on in the ecosystem at the time that people were basically saying blockchain, not Bitcoin. And interestingly, I do think that even though financial innovation was the first use case for blockchain technology, it is probably not going to be the most interesting. It'll be important, but kind of ubiquitous, and there'll be so many other things. I'm interested not only in like supply chain and the redundancy of systems
Mhm.
and natural disasters that can upend things. And identity. Those are some of the really interesting things that you can do with the underlying technology. But I quickly learned after having my own rabbit hole experience, and I think staying in my pajamas for 2 weeks, coming out of my room and saying, "Oh dear God, this is going to change the world." I must tell everyone that I had to learn enough, even as a non-technologist and not someone who focused on finances, to understand the possibilities, kind of the democratization, little d, not from a political point of view, but in terms of access and opportunity, kind of being my own boss, being my own bank, and making
Mhm.
my own decisions as a matter of financial privacy and autonomy. So I had to learn enough about crypto, even without being a technologist, in order to understand the whole point of it all. And then to understand prospectively and kind of normatively what could or should be in the future.
Yeah, you said something that really hits home. I talk to so many people that make a lot of money, but they still feel like they're still working for someone else. They're still working for a boss. It's crazy. They make 400,000 or 500,000, plus, and they're not happy. They're like
Right.
going, how is it that I can transfer that and wake up or go to bed when I want, take the dogs for a walk when I want. I'm not tied down to something. And a lot of people see this crypto or these different ways to diversify their wealth to kind of get out from underneath, at least have some type of resemblance of a life, even though they make all this money.
Hmm.
Um, so, number one, intellectual property, you touched on a couple times. The definition of it for our listeners, what is that?
Intellectual property involves kind of the big three that people have heard about: copyright, trademark, and patent. You could also think of right of publicity, although that's at the state level. The first three that I've mentioned are regulated and legislated at the federal level, and copyright focuses on exclusive rights to literary or artistic creativity. Trademarks protect brand names or
Mm-hmm.
logos, symbols, devices. It could even be a sound like the NBC chimes or the
Oh,
MGM Lion's roar, for example. And then you focus on patents, which focus on innovation, inventions. And so that could be something physical, could be something chemical. My mom's a chemical engineer, for example, and worked for DuPont for a number of years. So that's kind of how you divide up the big three of intellectual property. And then rights of publicity. We're in the middle of March Madness now, so we think about the NIL deals, all that good stuff.
yeah.
Monetizing your name, image, or likeness at the right of publicity level. And so I focused mostly my time on copyrights and to some extent trademarks as well. And I was really, in fact, the first thing I wrote, the first law review article that I wrote in this area is titled CryptoKitties, Copyright and Cryptography. And I wanted to see that, at the time in like 2018, CryptoKitties was all the rage. I'm using air quotes if anyone's just listening and not watching. And it wasn't so much about, trading these cute little curious digital cats, but the underlying technology, particularly with smart contracts and non-fungible tokens. What were the opportunities to use that same technology for real world assets and what that meant for intellectual property, which is actually the way that I recommend that everybody start to, with their intellectual curiosity, see what's going on at the intersection of what you already do and love and
Mm-hmm.
how it's being disintermediated or maybe transformed or impacted in some way by new technologies. So that's the IP in what I do.
Yeah, I've had some guests on podcasts that do the NFTs and they do these things, and they're like, it just makes my head spin. It's like, yeah, we're buying this intellectual property, and then they NFT it,
Hmm.
they sell, and they get with these movie stars and get these things, and it's like, yeah, record collections and likeness and things like that. But it's just crazy. And ever since the Sam Bankman-Fried ordeal,
Hmm.
you would think that crypto, it kind of took a dip, but now it's back raging,
Booming.
doing well. What do you see? I know Washington's heads are spinning because they don't want another SBF. They don't want, a mansion full of 20-year-olds running around amok, you know,
Even
uh,
offshore, right?
even offshore, especially. What are
Especially.
you, what are you seeing within this space, the current legal and regulatory issues around this type of asset class?
It's really interesting what's happening in 2024, and I do want to talk about SBF to give some context to that and also distinguish the majority of the industry. And that is not to say that what he did was not horrific. It
Mm-hmm.
absolutely is. But it also wasn't a failure of crypto. It was scammers going to scam. It's
Yep.
very much like Lehman Brothers, like Bernie Madoff. And actually, Sam was brought to justice far more quickly because of the transparency of the ecosystem, in comparison to the opaqueness of our current financial system. The opaqueness of our traditional finance system is the reason that we need so many laws and regulations for disclosures and accredited investors, et cetera. As I continue to testify before Congress, that was actually the last time was March 9th, actually, of 2023. And it was 1 year to the day after President Biden had signed an executive order for all administrative agencies to take a closer look at the impact of crypto assets across the agency bureaus, et cetera, both those in the cabinet and also independent agencies like the Securities and Exchange Commission, Commodity Futures Trade Commission, the SEC and CFTC, Treasury, FinCEN, et cetera.
Mm-hmm.
And it's so fascinating to me because I feel like this shouldn't be a partisan issue.
Mm-hmm.
Um, and yet, unfortunately, it is falling along lines where there's so many reasons on the Democratic side to lean in. I understand politics and understand that on the Dem side, they tend to push the narrative around protecting consumers and investors. Get that.
Mm-hmm.
We should do that. I
Mm-hmm.
also get the narrative on the GOP side of protecting business and innovation. Full support. Totally get that. And the fact that so many, and there have been some really great bipartisan efforts in order to get some greater clarity. It's not that we don't have rules. This is something that I talk about in Digital Money Demystified. One of the myths is that it's, completely the wild, wild west. There are no
Yeah.
laws. We are a nation of laws. We have laws and the laws about the laws. We
Mm-hmm.
have laws. And in fact, if we just enforce those, it'd be a pretty great place, right?
Yeah, that's right.
Um, but the idea that because of the nature of digital assets, taxed as property, so something that appreciates in terms of capital gains, you get notional and actual gains and losses, so more akin in that respect to stocks, for example, but also can be used as a medium of exchange, as a unit of account. So that's where we get the currency in cryptocurrency, although it's a bit of a misnomer because it doesn't go as far as it should as well. And I think that throws people sometimes. And to your point about the concerns of the government, they're very concerned. We're
Mm-hmm.
using the same technology, all of the technologies involved in blockchain, for example, have been around for at least decades. We have peer-to-peer technology where people used to, now I'm an IP lawyer, so I have to put air quotes around file sharing. A lot of that was copyright infringement, but that's an episode for another day, right? But we're using P2P technology, consensus protocols, the internet, cryptography. Most of your audience will already know what that means, obviously, but encryption of messaging, even before technological times. I mean, that is millennia old
Yeah.
when you're trying to get a message from point A to point B without being intercepted. It was this novel combination of all of those that gave birth to not just a digital asset, because we had digital assets before Bitcoin, which was first launched in January of 2009, but Satoshi, whoever he, she, or they are,
Yeah.
solved for the right the double spend problem. Like it's not a good idea for me to have a perfect digital copy of some value, but be able to send it to everyone else without exhausting my own. That was the true flex and the true brilliance of what's in the Satoshi white paper that really ushered in this new wave. And so the government now has a customer service issue when it was just, cypherpunks and tech bros and finance whoever's on the fringes talking about it, it just wasn't an issue. As crypto comes continually into the stream of conscious of the masses, when you have huge companies that are making huge inroads, when you have the SEC being forced by a federal court in order to approve the 10 exchange traded funds and the one conversion of Grayscale from a trust into an ETF, with the underlying spot Bitcoin trades. And in the spirit of full disclosure, I'm on the board of Digital Currency Group, which owns Grayscale. And so that happened in January. Gary Gensler didn't want to do it, but a court forced him and forced the SEC to do so. So we're looking at now in 2024 the maturation, which happens for every successful asset class. It always starts out volatile.
Yeah.
It always starts out unruly. It always starts by pushing the boundaries of law and our understanding of our relationship to each other, and to government systems and to private business. This is literally just how it happens. So we're really witnessing the maturation, and it's really causing some consternation on the Hill, to be sure.
It is. And so I go and type in into Google or wherever I'm going to buy some crypto. How do I know if I'm curious about it? What is safe? What is real? Am I clicking on something that is legitimate? What are you seeing around keeping us safe as curious? I'm buying my very first token or
Mhm.
crypto. How can I do that safely?
This is one of my greatest concerns, particularly for traditional investors who have done everything, but know that that's not going to be enough for the next 30, 40, 50 years that we're on the planet. And also the idea of really catching up. So oftentimes people are driven by some aspect of fear. I imagine that you talk about that a lot on the show as well,
Mhm.
either fear of missing out, right? FOMO
Yeah.
gets a lot of people, but also what I've been, I don't, I'm calling it fogey. It might be Foji, I don't know, but fear of getting in.
Mm.
Uh, right? This idea of
Yeah.
fear of getting, like, that we are have such fear about doing the wrong thing, we do nothing, and that is not a sound investment strategy. And I know that we fear what we don't understand. That's exactly where I began. And so, looking for reliable resources and tools that aren't trying to sell you something, but really supporting you in education. And there's just so many more opportunities for that now than there was when I got in, and even before. It was really rough going. It was trying to cobble together a list of podcasts and YouTube videos and etc.
Mhm.
And as far as I would get, then there'd be 10 other questions and concerns about I have I'm turning over my information, my personal identifiable information in
Right.
some cases, if you're depending upon the exchange you're onboarding to, and I don't know where they are and I don't know who they are, and I don't know what this is. It's
Mhm.
unbelievably frightening. So I found some reliable resources where you can start to just do the research. Coin Market Cap, I'm not um, sponsored by them or anything, but it's something that I use in Advantage Evans Academy, which is kind of what I do privately in addition to my full-time teaching, is really to work with investors to get them from point A to point B and go from cash to crypto in what you said, safely, legally, and confidently. CoinMarketCap.com is fantastic because it's an aggregator of every data point in the crypto ecosystem. It shows you all the historical data. I would actually not search a project with a search engine or any type of browser. I would go to coinmarketcap.com and use the links that they have vetted. And because there are tens and tens and tens of thousands of coins and tokens. We could literally, in the span of the time that we'll talk, create our own, and maybe it'd be
Mhm.
you and me and our family members that hold it. They ain't gonna have a lot of value, but we could do that because it's all generated with software. So I'm more interested in um, community, because all of this, in the same way that the dollar is backed not by gold, not by a hard commodity at this point, but by this story that we all tell ourselves. We all buy into the full faith and credit of the government. And it's the same government that last year we had bank failures that nobody wants us to talk about. It's the same. And I'm not marching in the streets. I love the almighty dollar. I'm not
Mhm.
burning them up. But I also know that other countries are starting to reduce their dependency on the dollar.
Yeah.
I know that we still come up against government created crises that are
Yeah.
making the rest of the world very nervous.
Mhm.
And every great empire has a moment, and you want to be able to hedge your bets so that it's not an either or, but a both and. If you are a prudent investor, it just makes sense to, if you're going to have 5% of bonds where it's ultimately reliable, you see the
Mhm.
interest rate, etc., then what about emerging markets? This is an emerging market. So whatever you might otherwise devote to emerging markets in your portfolio, this is something you need to learn. This language of the future of money and of wealth is important. And starting with uh, coinmarketcap.com, coindesk.com is also one of the premier news portals in the space. I would not rely, I like Yahoo Finance. I watch them all because I'm
Mhm.
an investor across the board. But when I want to get specific news about this industry that is not biased, other than being wholly focused on the crypto ecosystem, I'm looking at CoinDesk. I'm listening to podcasts that let me know what's going on, so I have less fear because I'm more informed.
Yeah, some great listen, everybody. It's like this is an expert. Go to her those sites that she's recommending. Don't just do what I would do, just Google, and not be informed. Something that is making the rounds. I don't know if Elon was the first to say it. It's
Mm.
um, this administration. They want EV cars. They're going towards a lot of electric stuff. Um, if I read it right, understand it right, the blockchain, the crypto, it's highly, you need a lot of electricity to mine
Mm.
and things like that. And he's saying, it's like, look, we need to do something about the grid, because if we're going to be doing all of these things and plus having nothing but electric cars, we don't have the electricity to do it within the nation. Are you hearing about any of that stuff? And are there concerns around crypto? It's like, okay, there's some cities and states out there that are starting to kind of regulate the amount of electricity that these miners can use.
Yeah, this is interesting because there are different ways for blockchains to reach a consensus about the state of the transactional data at any given time. And what Bitcoin uses, and what is the general concern around the environment, is a proof of work protocol, where you are devoting. At one time, you could do it with a CPU. You can't do that anymore. You need ASIC um, chips and a dedicated computer to mine. It's getting increasingly more difficult. If I was worried about the centralization in a decentralized space, it might be around the centralization of computers that can readily compete for a block reward, which essentially is the way that new Bitcoins come into circulation. Happens roughly every 10 minutes. And it it uses a significant amount of computational power in order to
Yeah.
solve for um, this equation. And the successful technology is the one that is the computer that wins, quote unquote. They get the newly minted Bitcoin. In fact, this year is the most recent time when the amount of Bitcoins for the reward is reduced by half. It happens roughly every 4 years. And that's why 2024 is a really great time, not legal or financial advice. Historically, if past is prologue, this is going to be a hell of a year. Not only do we have ETFs coming, that came in January, but we have the halving event that only happens once every 4 years. And historically, there's been a huge pump. For all those reasons, that's probably why we're seeing the major pump right now in anticipation of the reduction. But back to your question about proof of work, there are other types of consensus mechanisms or methods in order to achieve consensus. So recently, the Ethereum virtual machine switched to proof of stake, where you have to have a sufficient amount of ETH in order to make decisions. That also, that's the blessing, and maybe someone might have the concern about centralization. Like, it starts to mimic the traditional system where the haves have and the have-nots don't, or don't get a vote. But that's a story for another day as well. It is far more eco-friendly. And in the book, I talk about right-sizing the conversation. Bitcoin is a global network of computers all around the world who, if they choose to devote their system into maintaining transactional data, it happens all around the world. So when I see statistics about Bitcoin using the same electricity as a small country,
Yeah.
okay, but it's not using it for the entire world. And if we're going to compare apples to apples, we need to compare it to the existing financial system that every ATM, every bank, every Brinks truck, every person that has to commute, every computer that is used I mean, you get it, right? We have to have
Yeah.
the right size the conversation. That doesn't mean that we don't want to press these uh, builders, and it's not really the devs, but folks who are focused on what would be in the best interest from a project point of view for the world. All for that, but let's right size the conversation, because otherwise we're not dealing in the facts necessary to get us to the solution.
Yeah. And that's why we love having someone like you on. Again, everyone is Dr. Tonya Evans. Because I open it up, I read an article, and I don't know, who knows. You have to see whose point of
Right.
view and what their end game is on whether or not something is right. So let's get on switch a little bit to digital money demystified, and we'll spend a few times. Talk to us about your upcoming book.
And so it's actually out now, wherever books are sold. And I spend so much time in teaching mode, and I realized quickly that I can't be everywhere. My dean would like me to actually be in Carlisle sometimes. And so the idea of having to be everywhere and repeat the information as a matter of frequently asked questions, and also just, you know, aligning with what we were talking about earlier, my frustration with the headlines. I found there's so much lazy reporting. Sometimes
Oh yeah.
I was judgmental about, gosh, this is lazy. This is easy to find out. This can be very challenging, right? In the same way that my supercomputer of the car, I don't know what's underneath that hood, but I know it gets me from point A to point B. And then when I need to know more, then I'll find out or pay someone to do it, right? But I realized the barrier, it was easy to dismiss before off of a headline that was sensationalized in many respects to get clicks, that
Yeah.
had a story that people needed to know, but there wasn't the other side of, this can be dangerous if dot dot dot. In the same way that it was dangerous with the first use case of the internet, electronic mail, when someone from some country said, I would gladly pay you Tuesday for a hamburger today. I don't know, right?
All right.
It happens on my phone every day. It happens in my email every day. We're not throwing out electronic mail, although
Yeah.
sometimes we want to.
Mm.
So, um, this idea of moving into a space and separating fact from fiction so that we as investors can be more informed about the decisions we're making with our money as a tool, right? Not that I want everything that I touch in this house and going forth to actually work harder than me.
Mm.
In order for me to do that, I have to understand the point of it, why it's here, my relationship to it, the energy and the life cycle of it, which is why it's so important to understand historically how assets move. The same charting that I can do when I'm swing trading with stocks, in a rough sense, you can also do with crypto, although I will say, because crypto is a 24/7, 365 global industry, that you go to sleep one day and Bitcoin's 74, and then you wake up the next day at 62. This is not for the faint of heart, and you should not be investing with something that you need tomorrow.
Yeah.
Um, a lot of people got wrecked in the last run up. So it's just about wanting people, it's the educator in me,
Mhm.
sharing my own experience of my own rabbit hole experience, all of my fears, my misgivings, having to challenge my own assumptions, unlearn some things, and then learn. I learned so much about finance, um, governance, investing, the point of money, the monetary
Mhm.
system. I learned more in the last 7 years than I did for my entire life. And that's
Mhm.
somebody who has the privilege of education and all these other things. So I really had to unlearn the role that what I was taught around the table, get a good education, they can't take that away from you, get a good government job or whatever that the equivalent
Mhm.
of that is, get a house, some insurance, a little picket fence, and then ride it out. That is no longer sufficient.
Right.
The American dream is, in my humble estimation, is no longer house, white picket fence, and a job with the gold watch at the end. It's freedom.
That's right.
It's freedom. And what does freedom mean? Freedom of time, freedom of assets. The freedom for me, 1 year ago, I was on paid leave when I was writing my book. I took an unpaid leave. They said, you can do whatever you want with your little book, but we're going to need you to teach blockchain, crypto, and the law because we can't find anybody else to do that. I'm doing that right now. But I had the freedom to step away from a great paying job for a year to travel, to sleep, to figure life out, to be still. That is freedom.
It
And then
is.
to make decisions on the other side of that. So that's why I want people, I feel like oftentimes our intellectual curiosity stops at the last time we were in some type of formal education. And that's assuming that you enjoyed that experience.
Mhm.
Uh, but we have lived so much longer and there's so much more to be done. And so that's
Yeah.
why I wrote the book, to make sure people had the right information to make good choices.
That's very good. And everybody, I think that's why people listen to this episode, these episodes is, I have it above my desk. It says build a life that you don't need a vacation from. And for me, it's you can have money, you can have, but there's only so much time. I'm going to
Right.
die at some point. Might as well be happy and hopefully build enough funds or a cushion to where I can enjoy it a little bit.
Mhm.
Dr. Tanya, we appreciate you coming on the Richard Geek, and I'd like to say and wrap up that today's episode is brought to you by REI Words, your go-to SEO company for increasing traffic to your website. Check it out at reiwords.com. Dr. Tonya Evans, thank you so much for coming on the Richard Geek Podcast.
Thank you for having me.